Hi, everyone. I'm Maggie McGrath, Senior Editor at Forbes. Markets had a volatile day of trading on Monday in the third trading day since President Trump announced sweeping tariffs across the globe. Joining us to discuss the market reaction is my colleague, Giacomo Tognini. He is a staff writer on our wealth team. Giacomo, thank you so much for joining us.
Hi, Maggie. Great to be here.
So, as I said, it was a very volatile day on the markets. I think the Dow recorded its largest intraday trading swing ever recorded. Tell us what's going on.
Right. So, I mean, the sell-off started, this morning, looking at what was happening in Asia and Europe, and then there's a lot of volatility. Markets opened pretty down in the U.S. Then there was a bit of a recovery when there was reports that President Trump was considering pausing the tariffs for 90 days. Those turned out to be false, and then the stocks were trading down again. The S&P 500 closed about, 0.2% down. So not as dramatic as what we saw on Thursday and Friday last week, but still sort of the sell-off continuing.
And within the course of the trading day today, the S&P 500 did briefly flirt with bear market territory. So as we look across not just today, but the past several days, there's been a tremendous loss in market value. How much money are we talking about has been lost?
So it's hard, sort of hard to keep track of the numbers, but we know that, looking at Thursday and Friday plus the losses in Europe and Asia today, we're looking at more than $9 trillion.
9 trillion across global markets.
Right, right.
That feels unprecedented.
All right. Well, I was talking to some sources today, and we kind of haven't really sort of seen this reaction in the markets, at least since the COVID-19 in March and February of 2020. Sort of the level of uncertainty that's roiling the markets right now seems reminiscent of that time. Yeah.
So you mentioned you've been on the phone with sources. What else are you hearing from them? Are they looking at recession risk? Are they looking at different sectors? What are the top line takeaways you're able to share right now?
Right. So I've been talking to some sources in the shipping logistics industries, and so the bulk of the tariffs haven't gone into effect yet. The 10% sort of universal tariff went into effect on April 5th. But the top line numbers we've seen, looking at specific countries, will go into effect until this Wednesday, so 2 days from now. And what's interesting is that sort of any good that was shipped, that will be put on a ship or a plane or however else it gets to the US before midnight on Wednesday is not going to be subject to tariffs. And so you're seeing sort of a rush to get things into the US beforehand. We hear stories of like, what should consumers be buying before then? And it's kind of the same thing you're seeing with suppliers and importers. There was a report today that Apple was flying plane loads of iPhones from India, from its factories in India, to the US. And so we're not going to be able to see, the actual numbers of that for some time, just because, a ship going from, Shanghai to the West Coast of the US can take about a month to get here. But it's sort of seeing how companies are going to be responding to these tariffs and what they're trying to do to get in as many goods as possible, and then see how to price those things for people. And I think again, it's kind of hard to tell right now, but I've been trying to get a sense of you know, how does this affect the supply chains, and when are we actually going to see the impacts of these tariffs sort of on the ground?
You talk about Apple reportedly flying over parts to the US, and then you also talk about a ship that can take a month. So I imagine, depending on the company and the manufacturer and the shipping method, some are more able than others to kind of go around the tariffs or at least try to beat them, right? Like you can fly an airplane pretty quickly, but is there any way for ships already in transit to hit the accelerator and get here faster? It's probably a dumb question, but folks watching have stuff in process, in transit. I'm sure they're wondering too.
Well, so I don't think it's as much about the speed, but the regulations that the administration published show that as long as the good is onto the vessel, it's been loaded from the port, and that's the sort of the final mode of transit. It's not going to be switched to something else before it reaches U.S. shores or the the U.S. itself. Then, and if that happens before midnight on April 9th, then it won't be subject to those additional tariffs beyond the 10%. So it's kind of like a mad rush to get things here before then. And of course, these weren't the first tariffs that have been implemented by the administration, right? There was the auto tariffs and car parts tariffs announced last month, I believe, and then also the ones on Canada and Mexico. And so a lot of companies, depending on the industry, have already been working through how to deal with these impacts, right?
So you've been talking to shipping and logistics sources, and right before we started recording, we were talking about the other sector by sector responses we've seen, at least in the market today. Tell us what you've seen happening with retail.
Right. So, just again, I'm on the team that covers Billionaires, so we're sort of looking at stocks sort of through the prism of what's happening to, these founders and shareholders and sort of how they're responding to it. And, on Thursday and Friday, the biggest losers were largely, tech founders. So, Mark Zuckerberg of Meta, the Facebook parent Meta, and then Jeff Bezos of Amazon were down the most. They're still sort of down from before, those stocks are still down from before the tariffs were announced last Wednesday, but those have recovered somewhat today. And instead, the biggest losers we're seeing today are, for example, Inditex, which is the parent company of Zara, and big fast fashion powerhouse, LVMH, the luxury conglomerate right behind Louis Vuitton and Dior. Those stocks were down today, and we're also seeing in China, some of the largest companies, they are also being hit. So, for example, there's a company called CATL, which is one of the largest suppliers of batteries for electric vehicles. They were down quite a bit today, as well as Xiaomi, which is a company that makes some of the biggest smartphone brands outside of, iPhones, for example, or Samsungs. They also make electric vehicles. They were down quite a bit. And so, obviously, another thing that happened today was that President Trump was discussing potentially even higher tariffs on China than what he's already announced. And so we're seeing sort of the investor reaction to that. So, you're looking at um, Chinese companies that are obviously, exporting a lot to the US, as well as, apparel, luxury, goods that, not only depend on, in many cases, manufacturing in these countries that are set to be hit by the tariffs, as well as, in a sector like luxury goods, right? A change in a significant change in price, it might not price out the sort of the highest consumers that buy those goods, but could still have an impact on those companies.
And of course, I am not surprised to hear you say that there was volatility within the stocks of those Chinese companies, because I think a large portion of the headlines we saw today was the back and forth between Washington and Beijing.
Mhm.
Tariffs from the US, retaliatory tariffs from China. I saw something close to 50% mentioned from the White House as recently as this afternoon. But it's still a very fluid situation. Would you agree?
Yeah, no, definitely. And we've seen today, for example, Treasury Secretary Scott Bessent tweeting that he had positive discussions with his counterparts in Japan and negotiations ongoing there. But then we also had uh, Peter Navarro, also in the Trump administration, writing an op-ed for the Financial Times, um, sort of saying that these are not necessarily a negotiation and the tariffs are here to stay. And so it's kind of unclear what ultimately is going to happen. I saw that the Cambodian government was offering sort of much lower tariffs on the US. Um, I believe last week we were talking about Vietnam also negotiating. There's been discussion of the European Union discussing changes in tariffs with the US. So it's definitely still very fluid, and you know business leaders I think are also kind of in the dark about this, and so it's hard to parse from the outside, right?
Well, it's interesting. You mentioned how in intraday trading there was that brief kind of pop on the suspicion that there might be a 90-day pause or timeout. And that seems to be in response to Bill Ackman
Mhm.
coming out and saying, hey, we need a 90-day pause. So that brings me to my question. Since you cover billionaires, let's first talk about what they've been saying publicly. Has anything caught your attention today in terms of who is speaking out one way or another?
Well, yeah, no, yeah, Bill Ackman definitely was one of the most vocal we saw today on Twitter, talking about how he thinks there should be a 90-day delay. Another interesting comment I saw was Elon Musk um, talking via video link to a conference, political parties conference in Italy, saying he hoped for zero tariffs between the EU and the US, something which obviously is not in place now. Um, and there's also we saw that Jensen Huang of NVIDIA was at Mar-a-Lago, I believe today or this weekend. We don't know obviously what was being discussed there. Um, but it definitely seems like there isn't a ton of comments from many of these billionaires, but we are starting to see, if not pushback, sort of comments on the impact this might have on their companies, right? And but again, the pause doesn't seem to be uh, you know, on the cards right now. Obviously, with the tariffs that had been previously announced on China and sorry, not on China, on Mexico and Canada, those were paused for a time in February and in March. But so far, there hasn't really been any indication of that with these tariffs that have been announced. And there's obviously also many billionaires in the Trump administration, right? Howard Lutnick, for example, the Commerce Secretary. We haven't seen any sort of commentary that was critical of the tariffs from them. In fact, sort of, he for one has been continuously supportive of them.
We spoke on Friday about how much money some of the world's billionaires had lost last week. So, with losses continuing today, who has caught your attention that is down today, or maybe newly down or continued down?
Right. So I mentioned it briefly before how, the biggest loser, last week was Mark Zuckerberg. Today he was the biggest winner, up 3.9 billion. Still down significantly from before, but that's part of the sort of that slight rebound in those tech stocks. Same for Jeff Bezos and Amazon, Jensen Huang and NVIDIA, Michael Dell, and then the Google co-founders Larry Page and Sergey Brin also up. And we've seen instead a bigger sell-off, right, with some of these apparel companies. Bernard Arnault, LVMH, is down significantly today, down $6.2 billion from Friday. And he was one of the top 10 sort of biggest losers on Thursday as well. And so we're seeing sort of a continued decline for certain people, and a little bit of a rebound for some of these tech companies. It's not clear to me at this point why that is. But another interesting one I saw today was Rob Walton, for example, of Walmart, up slightly today. I've been reading some analysis on the fact that a massive retailer like Amazon probably has much bigger room to be able to deal with a tariff shock than a smaller store. And same goes for Walmart, right? Where they're able to either shoulder some of those costs initially themselves, or figure out ways to lessen that blow. My colleague on the Wealth Team, Phoebe Liu, wrote a great story about that, and how Amazon would be able to navigate that more successfully. Then, of course, just going back to the point I made earlier on the fast fashion giant Inditex, billionaire founder Amancio Ortega down $4.4 billion today. A lot of that manufacturing takes place in these countries that were hit by tariffs, right? Particularly in Southeast Asia and South Asia, East Asia. And not only will they be hit by those tariffs, right, but also the kinds of consumers, many people who buy those clothes are probably going to be likely to no longer buy them if the price shifts dramatically, right? It's a more elastic good than, say, the luxury goods sold by LVMH that we were talking about before, for example.
That's a really interesting point. It shows how pervasive the tariff effect has been, and it's also kind of a corollary to something I was talking to a chief investment officer about earlier, which is the impact on small businesses, right? If you source from one country and that country is the recipient of an especially high tariff, your business is in bigger trouble than someone who, as you just identified, operates across the globe, across multiple countries. What else are your sources telling you, and have any begun to predict when the market could stabilize?
So far, no. I mean, I think it's it's really hard to tell. I was talking to someone today who was, in the shipping industry and logistics, talking about how it's it's a bit of a paradigm shift, similar to what happened with COVID, right? And how even now we're still living with the effects of how that's changed supply chains, work from home, and sort of how that's changed sort of lives, around the world. And if these tariffs are here to stay for the long term, how will that impact trading relationships, between countries outside of the US, right? Will, you know, consumers and companies in Europe start trading more with China than with the US? How is that going to reshape the global trade order? It's obviously way too soon to tell. The stock market reaction is going to be more likely to react to, news coming out day to day, like we saw today with that news about the 90-day delay that wasn't to be. But if we're looking long term, it's going to probably take months and months, if not years, to shake out, right? I remember in 2020 covering it, we were all looking at healthcare and biotech sort of constantly, right, to get a sense of what was happening, supply chain disruptions. We're going to see that now as well, in terms of what's going to happen to these supply chains, how it's going to change the prices of goods. And it's it seems, if you're looking at the stock market reaction and also what I've been hearing from sources, sort of the biggest shock to the system, or at least change in the global economic system that we've seen at least since 2020.
Biggest shock to the system, at least since 2020. I think the market data is bearing that out. We saw margin calls on hedge funds reaching 2020 like levels. There have been a lot of comparisons to 2020 here. Now, Giacomo, we've talked about retail, we've talked about tech. Are there any, and we've talked about shipping and logistics. Are there any other sectors that you've been looking at, or are there any other sectors that you'll be looking at tomorrow that have your attention?
I think as we get closer to Wednesday, it will be interesting to see um, how many of these sort of which of these sectors are being hit constantly, right? Um, so not I don't have any particular ones I'm looking at sort of uh, looking to tomorrow, but if we're looking at what is not recovering versus what sort of is, right? I think apparel will be one that we're going to be looking at for sure, going forward. Uh, I cover some shipping companies as well, so looking at sort of how they're impacted by this as well. Another one is home building, right? Because that's an issue that grew a lot last year because there's a shortage of homes in the US right now. But the all the materials, right, all the inputs for new homes are going to be much more expensive, with the tariffs. And if there is a recession, right, it's too soon to tell. That would also impact the demand for these new homes, right? And I think that's going to be a really interesting one to look at. Obviously, home building and the housing affordability crisis was a big topic in the US last year before the election. And so I think that's another one where it'll take a little bit more time to play out, but one we're keeping an eye on for sure.
So lots of questions remain, and with market volatility at a high today, I'm sure we're in for a wild ride tomorrow and Wednesday as well. Giacomo, thank you so much for joining us again to give us your breakdown of what's going on. We really appreciate your time.
Thanks, Maggie.